Well, welcome back, everyone. Welcome to the wonderful summer month of June, and we are kicking it off with indeed a bang in markets. Now, this chart is a daily candlestick chart of the S&P 500. It goes back to October of 2022. Why am I bringing this up? Well, the channel that you see superimposed on price is like a bell curve. It's a 2 standard deviation channel. And the way the dynamics of the channel work is when we get into the uppermost quadrant, we're more likely to pull back, especially if we come back up off of said pullback and make a negatively divergent higher high, which is what's happened over the last several weeks. And we know when we look at price action in markets, we want to get an edge. So we're going to apply our technical tools to this chart. But what I'm doing right now is centering the more recent action with that huge mechanical buying tail that we saw on Friday and that intense reversal. Well, price action today got us back to just under that pink line, which is still keeping us not in the uppermost, but in the second quadrant, keeping the door open for price action to actually pull back. Now, you've got some pivot levels on the screen over here, and the key pivot line that was broken earlier today but regained is that blue line right there. The blue and the purple line are the center of our weekly pivot levels. And back down below 523.65, trouble is indeed abound. However, above roughly $530 at about a nickel or so, the upside room to retest all-time highs or higher is likely in play. Now, in order to determine what is a likelier outcome in this very volatile type market, well, let's go right over to our technical suite of tools. You've got the Champion Trend Pack Toolkit applied primarily on screen. I'm eliminating the subcharts because I want to really zone in on what's happening at the hard right edge of the screen. You've got a daily chart of the S&P futures, and as you can tell, vis-a-vis Friday's close, where we got a high on Friday of roughly 53.07. Well, and a close of just under 5,300. Today, we've got the market still ticking away as I speak right now, a high of 53.13 and a quarter of a point. And the drop then ensued during the day, but a reversal in the afternoon, very similar to last Friday, did take place. Now, the signal structure is what matters here. We have a champion cross buy zone right over there. And when it comes with the on chart, bottom of the chart block right there, you've got a buy signal state. When you've got the champion trend buy zone in play, where you can see it remarked by a plaque and the buy zone trail line, well, together, the two would remark being in stage one of a sequence of signals. Stage two is usually remarked by, back over here when we were running through the signals, wealth signal, that orange ball. Stage three, the breakout forecasters. So do we have stage one in play? Well, as of today, we do have 2 days in a row of an expansion of the champion cross buy zone. So that's good. We've got the blocks at the bottom there. The buy signal states in play. And of course, we've got champion trend, champion cross. Together, they make stage one. Now, in order to tell us that we're moving forward, we need a signal for stage two. Now, that would typically be a orange ball wealth signal. But when you're resuming a sequence of signals, it can be replaced by things like range breaker. So for example, if price action shoots up over the next day and tries to come up towards the highs and a range breaker is issued, which looks like, I've got it formatted slightly differently, but it looks like a blue ball underprice right over there. It implies that we're likely going to come up to a range high and potentially break it, as you saw back over there, as I was just demonstrating. Now, I'm not saying that that will happen. We're in stage one. We're holding above the champion cross buy zone, and we're looking for that fast speed line to cross above the slow to confirm that this turn can actually remain in play. So this is still in the making. It is not a granted situation for up, and away. When we look at the NASDAQ, it's more in what we would call the kill zone. You've got falling resistance on top of price rising support underneath it. And similar to the S&P E-minis, we want to see if there's a signal here for resumption. In fact, we don't have it here. Notice that the champion cross buy zone is more stagnant. It's not growing. And we're missing the block at the bottom of the screen. Furthermore, price action is below the speed lines and below the champion cross buy zone top. This puts us in a spot where the index that has a lot of clout to control the S&P in the primary market, overweight in the Mag 7 stocks, is not in a state that is advanced as much as the S&P is. Now, saying that, the S&P has not followed through with an incremental bullish signal, but price action sure has proven out positive. So we are in a status right now where the turn up again from the Friday reversal is not giving me everything I need to see to say this is a swingable moment for up, and away. In fact, for the NASDAQ, it's a bit of a danger zone. Now, the NASDAQ getting up and over roughly 18,775 points to 18,800 on the nose does open the door for a potential retest of highs. Okay, so that would be one area to look for. Now, the ES getting above the last major bar at around 53.20 to 25, that opens the door for potentially more. But I want to as much focus on the downside risk. So back to the NASDAQ, coming down towards the lows that we saw in market today, the lower 18,400s would be sufficient to open up more downside risk than we saw today. In fact, getting down below the champion cross buy zone bottom, which is around 18,485, it opens the door for a potential retest of last Friday's lows or more. And when we look at the S&P E-minis, a move that takes us down below the champion cross buy zone bottom is also good enough from my perspective to open the door for downside risk to test at minimum this area as a likely outcome, the Friday lows. So I want to be really on guard with the opportunity for swings. I want to maintain my short-term focus. And if the market does continue to see the US dollar getting pushed down, well, that can support things. Just note that we've got major data coming out on Wednesday. And that data is much like the ISM data that came out today, showing growth is slowing, prices are slightly down, but not enough to necessarily create a risk reversal. Well, guess what? On Wednesday, we get the services side of the data and similar prices paid. We also get the Bank of Canada's rate statement. And ahead of all of that, we get the private payrolls. Following Wednesday, Thursday is the Eurozone central bank's turn to give us their monetary policy. Are they cutting? Are they staying pat? And if they are cutting, perhaps a stronger euro, weaker US dollar can keep markets afloat and put a little bit more shine on precious metals. But again, I want to trade what I see, and what I see right now is we're not all in the clear on the two key indices that would have to really work hard together to tell me a new all-time high is in front of us. I'm risk averse until proven different and looking forward to tomorrow to gain more insight in this market from a swing standpoint while day trading continues. I hope that you enjoyed this video. I look forward to sharing more insights like these with you in videos to come. Have an incredible rest of your day, and thanks for watching.